Alright, hey, what's up guys? Scott here again with a brand new video, and for this one I'll be discussing and showing you with an actual trade that I made yesterday and took off this morning why buying options prior to a big earnings announcement, right, basically to play for a large move in one direction or the other once those earnings figures become public, why doing that is almost a guaranteed way to lose money. And so in particular here, we're going to review my Netflix earnings trade, which is the one I took off this morning for a nice profit. And that's because, of course, instead of buying options prior to the announcement, I sold options. Now, as always though, before we dive in here, make sure you guys watch until the end of the video, because at that point, I've got a very cool limited time opportunity for you all where you can receive up to 10 free stocks, and each stock could be worth up to $2,500. And also, for anybody who would like to join a very exclusive online community where you guys can really learn how to successfully trade options, then you can now join my options trading Discord. So make sure you guys check out the description of this video below, because I do have a link to a separate video that will tell you guys all about that Discord and discuss the main features and benefits, and also a link to my sign up page where you can join and begin your 7-day free trial. And then finally here, for anybody who is brand new to the channel, again, my name is Scott, and you can also find me on SKILLSHARE as well, where you can take my very detailed classes on options trading or stock market investing. And you will also find some links to a few of my introductory courses in the description of this video below. So be sure to check them out, and when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. Alright guys, so now we'll dive in here, and first taking a look at Netflix. As you can see, the stock is up by about $7 as of right now. So again, this is the morning after the Netflix earnings announcement, which was yesterday after hours on June 19th. And the expected move for Netflix was actually to be up or down by about $30. So this here was definitely a very, very anticipated earnings announcement. There's a lot of uncertainty and commotion around Netflix's numbers, especially given that the past 2 earnings cycles for the stock have been pretty abysmal, right? As you can see here on the chart, I'll go ahead and zoom in a bit here. And so right here and right here were the last 2 earnings announcements for Netflix, and both times this stock dropped by a huge amount. So that's why once again here with their latest announcement, like I was saying, there was a lot of uncertainty and built up anxiety basically around this announcement, because, you know, what if Netflix had another huge catapult to the downside? That would obviously not be good for investors. And ultimately, the way you can tell if there's a huge buildup of anxiety around an announcement like this is by looking at the implied volatility of the stock. And also, this is how you can actually quantify the expected move for the stock over the earnings announcement. And so if we come down here, this chart is showing you the implied volatility for Netflix. And just in case you're not aware, implied volatility is quite literally a measurement of uncertainty about a stock's future. And also, more technically speaking, it has to do with an expected price range in the future. So again, that's how you can use implied volatility to calculate the expected move for Netflix here over one specific day. And so bottom line here, the most important thing to understand about implied volatility and earnings announcements is that as you approach an earnings event, you almost always see a large expansion of implied volatility, or a large expansion of uncertainty about that stock's future, right? You can see the exact same thing over here with their previous announcement. Leading into it, you saw an expansion of implied volatility. Same thing again over here, large expansion, and so on and so forth. And hopefully this should be intuitive as well, because earnings events are the best ways for investors to get a very inside look at how that company is doing. So of course, it's just human nature that as you approach an earnings announcement, as you get closer and closer and closer, there's more and more anxiety being built up around that event. But also here, take a look at what usually happens after an earnings announcement. You almost always see a very large crush of implied volatility. And again, hopefully that is also intuitive, because like I was saying, leading into an announcement, there's a buildup of uncertainty. But once those earnings figures become public and everybody knows what's going on with Netflix, all that uncertainty and all that anxiety goes out the window. And so like I was saying, this earnings event had a huge collapse of implied volatility literally just the morning after. And you will almost always see something just like this if you also see a very large expansion of implied volatility beforehand, in addition to the stock not moving as much as expected. So on that note, if we come back to the trade tab here and take a look at this small number right here in yellow, this number here shows you the 1-day expected move for Netflix based on the implied volatility for the stock, right? Because again, as I explained, implied volatility more specifically or more technically has to do with an expected price range at some point in the future. In this case here, 1 day in the future. So ultimately here, because as I showed you on the charts, because implied volatility was so much higher yesterday before the announcement, that's why yesterday the expected move here was plus or minus $30. Right? So basically because of this increased amount of uncertainty and anxiety around Netflix's earnings, that's why the market here was expecting the stock to make a huge move. And then of course, the morning after, once the earnings figures were known, all that implied volatility collapsed, all that fear and uncertainty went out the window. And so that's why today you see a much, much smaller expected move for tomorrow. Now, finally here, having explained all this context, what does all this have to do with buying options prior to an earnings announcement? Well, implied volatility is also used to price option contracts. And specifically, as implied volatility expands, you usually see option prices go higher. But if implied volatility collapses, you will see option prices collapse as well. And so ultimately, unless the stock actually moves beyond what's expected, more than the expected range, then option buyers prior to the announcement will almost certainly lose money. Right? So again, here with Netflix, this stock is up still by about $7 or so, 6.5 now. So you might expect that call option buyers prior to the announcement would make money, right? Most people would expect that if you buy a call option and then the stock goes higher the next day, you should expect to make money. Well, unfortunately, take a look at this column right here. This is the overall net change of these option prices compared to yesterday. And so as you can see here, basically every single one of these call options, both in the money options, at the money options, and out of the money options, every single contract has lost value compared to yesterday's prices. So for example, with a 215 strike call option here, you can see here the price of this call option has fallen by $5.26 on a per share basis compared to where it was yesterday prior to the announcement. So therefore, in total, if you had bought this call option before the announcement, and even with Netflix being up by about $7 as of this morning, you would still be down by $526. And again, same thing goes for all the other contracts as well. There's not a single call option here that would have made money on this earnings announcement for Netflix. And just to be clear here, this is the August monthly cycle with 30 days left to go, but also same thing applies to pretty much any other expiration as well. What if we go into the July 22nd expiration with only 2 days left to go? We'll unfold this tab here and scroll down. So basically, unless you bought super far in the money call options that expire again in 2 days, and also for very hefty prices, $5,000 or more, unless you bought these contracts, then again, you would have lost money on every single other contract here. And of course, also, the story is the exact same for the put options, right? So as you can see here, every single put option contract has lost money today, which should be intuitive because Netflix is higher today than where it was yesterday. So of course, put option buyers will have lost money on this earnings announcement. So therefore, really my main point is the fact that even if you get the direction correct on an earnings announcement, again, unless the stock moves beyond what's expected, you're pretty much guaranteed to lose money. So for the case of Netflix here, this stock pretty much had to move by over $30 in either direction for either put option buyers or call option buyers to make money. And of course, the main reason for that is when the stock moves much less than expected, which does happen the vast majority of the time, then you are almost guaranteed to see a huge collapse in the implied volatility. And as I explained, when implied volatility collapses like this, so do the prices of option contracts. Their prices also collapse. So bottom line here is option buyers over an earnings announcement are always fighting this crush in implied volatility that's pretty much guaranteed to happen. And really the only time where you don't see much of a collapse at all is when the stock moves much further than expected, which in the case of Netflix here happened 2 times in its previous earnings announcement. So yes, in these 2 cases, if you bought put options, you would definitely have made some good money. But like I said, the vast majority of the time, stocks move less than what's expected. So again, the majority of the time, if you buy options going into an earnings announcement, you are almost guaranteed to lose money, especially in the long term over many, many occurrences, right? So if you just gamble a couple times on Netflix and you made a lot of money, then great. You should stop right there because again, if you do this many, many times over and over again, then on average, you will definitely lose money. And so ultimately here, that's why the trade I made yesterday on Netflix, if we come back to the monitor tab, And then we go to my account statement here. And so as you can see right here, yesterday on the 19th, pretty much right before the market closed at 3 o'clock Central Time, for this trade here, I sold a short strangle, which is a combination of selling both an out of the money call option and an out of the money put option at the same time. So specifically, I sold the 280 strike call option and a 145 strike put option, and also in the August 19th monthly expiration. So again, coming back to the trade tab and going to that monthly cycle in August, and if I scroll down a bit here, and right there is the 280 strike call option, and then scrolling back up, right here is the 145 strike put option. And there you go. As you can see right now, this put option has fallen in price by almost 300 bucks. And then the call option here has fallen by about 170 bucks. So ultimately here, coming back to the monitor tab, if I initially sold the strangle for a starting credit of 512 bucks, and then as you can see this morning, this here is my closing order where I bought back both contracts, and I did so for a much smaller debit of only $170. And so the difference here is $342. That was the profit I made just overnight over the course of this earnings announcement in order to take advantage of the huge collapse of implied volatility. So bottom line here is if you do want to place some earnings trades, I think your best bet is to look for stocks with very high implied volatility and then to sell options well beyond the 1 day expected move, either a strangle or an iron condor. You can also get a bit directional as well with perhaps a put credit spread or a call credit spread, short put option, etc. Although for me here, I pretty much always sell strangles, right? Because in that way, it does not matter which direction the stock ends up moving. It could go up or down, totally irrelevant. The only thing that matters is that the stock does move but stays within the expected range and therefore take advantage of a huge collapse of implied volatility. And so with that being said, that's going to do it here for this video. I hope you enjoyed it. But of course, one last thing, as I mentioned, I've got a very cool limited time opportunity for you all where you can receive up to 10 free stocks. So basically, there's a newer brokerage company out there called Moomoo, which is based in Palo Alto, California. And again, for a limited time, they're offering you the opportunity to receive up to 10 free stocks when you open a brokerage account with them using my link in the description of this video. And so the Moomoo trading platform is highly competitive with other comparable platforms like Webull and Robinhood. There are absolutely no trading fees on stock or option trades. You also get direct trading access to US, Hong Kong, and Chinese markets, which is something I have not seen being offered by competing platforms. Moomoo also comes with a free, very advanced, yet totally user-friendly trading platform that you can install on your computer or your smartphone. And of course, everything is regulated by the SEC and FINRA, so your trades and your investments are properly insured. And so if that sounds good to you, then again, use my link in the description of this video to sign up and get your free stocks. And also don't forget to check out and sign up for my options trading Discord as well as my Skillshare courses. Links also in the description of this video. And finally here, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week and you don't want to miss out. So thanks again for watching, and I'll see you next time.